Hello and welcome to another update video about ADA. I know a lot of new viewers, so we start briefly with a high level wave count. We haven't done that for a while. Just a quick reminder here, that's the overall ADA chart, where we can see that back in the bull run in 2017, early 2018, we formed the first wave of ADA, a wave 1. We then came down in the bear market into March 2020 in a wave 2. We are now in the white wave 3, somewhere up there. The white wave 3, however, requires a wave 1 in a subwave, a wave 2 in a subwave, and in my opinion, we either are still in this wave 2 or we have already completed it. So the view is that everything that we did here last year after the wave 1 was just an A overshooting wave B and a wave C of a wave 2. Pretty much like the Bitcoin chart, yeah. Some coins have done the same. This is for me the most likely scenario. The reason is that this is not a wave 3 and the wave 4 because we came down too much. Okay, we came down too much to invalidate this. On the log chart, if you use the logarithmic chart, you might come to a different conclusion, but I'm not using the log charts generally because they distort wave relationships, which are so crucial to understand. The natural wave relationships of market sentiment, they are so crucial to understand, and if you use the log chart, as you can see, it messes everything up, it flattens it out, it makes it, in my opinion, wrong. Yeah, so let's take a look at this now. Where would, in a new all-time high scenario, Cardano go to? And that's also something that I get asked a lot. It would be at least the 1.618 Fibonacci extension in a wave 3. That would be at least $4.41. Now again, this could take years to play out. I'm not saying it will, but it could take years to play out. But as soon as the market kicks off, as you can see here in November 2020, it can only, it might only need 4 to 5 months to move to new all-time highs, as you can see here. So this can go very quickly, but it can also take a few months or even years to pick up momentum. And this is what is impossible to determine for Elliott waivers. And generally, market timing is one of the most difficult things and most unreliable things that you can work out. People try it again and again. There's even other YouTube channels where they use some sort of Fibonacci time circles and things like that. But these calls are oftentimes also not working out. Its timing is extremely difficult. What the Elliott waves can do, we can work out price ranges. When the market will reach these is hard to determine. For example, a bear market can take a year. It can also take 2.5 years. And when we reach that wave 3 target is very, very hard to determine. We would need to pick other methods than, for example, the Elliott waves or Fibs. One of these would then be, for example, the Bitcoin halving cycle, but even that one is not a rule that it always works out. So timing is difficult. Okay, the difference is here with Elliott waves, we are dealing with rules. We are dealing with rules of market structure, and they are rules, but in terms of timing, it's difficult. Okay, so ADA, said it before, the ADA chart has become one of the weakest ones due to that strong drop here. It is not far away from the low at 40.2 cents here. We had considered the option of a truncated low. I was never extremely happy with it, as you will remember. Ideally, what you want to see in any low like this one of a wave 5, because we assumed, or we had a case to be made for the end of the bear market here on the 13th of July. What I would have loved to see was a move to 30 cents, or even at least lower than the 12th of May. You will remember, I always waited for that lower low below this one from the 12th of May. When we then started to move up, people already complained again. Because a lot of people waited for buying lower. Now, I always say don't wait for the lowest low because it's basically impossible to get the lowest point. But it was not ideal to figure out the low in here because it's a so-called truncated low. And it can only be justified if the price movement afterwards is very bullish. And to be fair, we moved up very, very strongly afterwards. And at 46 cents, I told you back then, we can carefully consider the bullish scenario. Now we are currently at the same level again. So basically sideways movement for over a month. Yeah. And now while we were here getting carefully bullish with a 60% probability for the bullish scenario, this is now getting seriously challenged. And I said before, if we go below 42.1 cents, then we have to consider that the low wasn't in here, that we will make a lower low, and maybe then we get finally to that 30-cent level. And the overall original forecast then will work out in the end. But then the higher level wave count needs to change a bit, and all of this would need to count as a triangle. As long as we are above 42.1 cents, and as long as the bulls are using the current scenario to defend the scenario, yeah, and the bulls hold above 42.1 cents, then we can remain carefully bullish at the moment, but here it is getting threatened, that level, yeah. And below 42.1 cents, I will move over to the more bearish scenario primarily. But what is more important now is the lower level wave count here. What is happening here? Also here, two possibilities. One possibility is that in this move down, we have already done now the wave 4, and we will very shortly come down. So this scenario can be counted as a triangle. This has not changed. In this triangle, we would be waiting for a move below the wave D. If we go below the wave D at 45.4 cents, then it would be a good indication that the triangle is breaking out to the downside as expected. Yeah, because you would expect the triangle to break below that wave D. And if we go below the low of the wave B, it will be the confirmation. So wave D is 45.4 cents, wave B is 43.8 cents. Yeah, we would be waiting for those levels to break and then make one lower low. All it needs to do really is to get below 43.5 cents. To the upside, the triangle will be invalidated if we go above 47.3 cents. It would then be something else, maybe just a diagonal pattern here in a wave C, not triangle anymore. That would then be more in line with Bitcoin's wave count. Could we say the low was already in here? In my opinion, yes, it's possible, with the assumption that maybe we had wave 3 here, as I said, then we moved up in a 4, this was the 5, and then we would be moving up already in a wave 1. This would be the wave 2, but and then also of the wave 2 here an A, B, C. But this is not high confidence, and I would only move to that scenario that the local low of this correction is already in. If we move at least, and that's the absolute minimum expectation, if we move impulsively above 49.2 cents, because this wave 4 can without a problem stretch out to this level, and that is actually the ideal retracement for a wave 4. The wave 4 could even stretch higher, and that would be all the way up to 50.8, 50.9 cents. But if we get already above the ideal level, then the wave 4 would get quite large in comparison here to other waves, and then we would consider rather here the bullish possibility, or the scenario that the low is already in. It's a bit unclear because, again, this is not a clear impulse to the upside. It would also only be working with a scenario of a wave 1 as a leading diagonal already to the upside, and in line with other crypto charts. I would rather expect that move down to happen. After that, however, I would expect in the bullish scenario a large impulsive move up. That is what would need to happen to maintain this particular scenario. If we only see a corrective move up that does not manage to go above the previous wave B or even above the previous wave 1 at 55 cents, then it is increasing the likelihood that we will come down once more. So if we do something like here a wave A down, the wave B up, yeah, maybe only to 54 cents, then it is increasing the likelihood we will come down eventually in a wave C. That is also a possible interpretation of this, that we will then make lower lows. So it really depends on the next larger recovery wave. How are we doing this? And if this is going to be impulsive and breaking above 55 cents, we should be good, and we should actually see a wave 3 that could actually reach the 66, 67 cent level. But if we do not break above that level, then the bullish conditions aren't fulfilled and we will eventually make a lower low, and possibly good target for that would then be that 29 to 30 cent level that we actually waited for originally. That never happened. And that's currently the imminent scenario here and the longer term outlook as well for ADA. Very important to understand that we're moving into an apex here from a, let's say, traditional TA point of view. So keep an eye on that. Could even say either here triangle, or looking at this in terms of some kind of an ascending wedge maybe. So yeah, definitely getting closer here towards a decision point, worth keeping an eye on that. Alright, and that's my update about ADA. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.